So today what I want to do is clarify the escrow shortage situation. My name is Andrew Gavin. I'm a licensed California lender and I sell real estate here in San Diego. As I've been on my TikTok scrolling, I've come across more than a half a dozen of these crazy videos about escrow shortages. And I decided to put something together and show you some data that should clarify this and help you understand, one, why your mortgage payment might change, and two, what's causing that change. All right, so let's get started. So for this scenario, we're going to purchase a $750,000 house. We're going to use 100% financing for the loan. So our loan is going to be $750,000. We're going to give it an interest rate of 7%. A $750,000 loan at 7% is going to have about a $5,000 monthly mortgage payment. You can see on this chart that $49.89 is the payment, and you can see on that third column it's all zero because I did not add in any property taxes and any insurance, and there will be no PMI in this scenario. All right, so all homes with loans, you're going to end up paying property taxes and you're going to have insurance. A full mortgage payment includes principal payment, interest payment, tax payment, and insurance payment. The taxes and insurance go into your escrow account, and taxes are paid twice a year in March and November, and your property insurance is paid annually around the same time you closed on your home. Okay, so I'm going to add in $100 a month for property insurance. And for this scenario, I'm going to use 1% for property taxes. So I'm going to put in $7,500 in property taxes. Our new monthly payment is going to be about $5,700, and that includes principal payment, interest payment, tax payment, and insurance payment. You can see on the chart that the principal and interest amounts year over year are being collected at the exact same amounts. But now you can see we're also collecting $8,700 for 1% of your property taxes and the $1,200 for your annual property insurance. All right, so let's jump ahead, say 2 years. And what happens is the city or the county that you live in, they send out their assessor and they reevaluate your property. Your property is now worth, instead of $750,000, they're telling you that it's now worth $800,000. So you can see here, I'm reflecting your property taxes at 1% based on the new value of $800,000. I have circled the loan amount because that's how we got the original calculations, and that won't change. As we look at the new document with just that change in property taxes, it was only $500. It wasn't a big deal. So your monthly mortgage payment only changed about $40 a month based on this increase in assessed value that caused your property taxes to go up. Now, that money is going into the escrow account and it's being stored there. And as I said at the beginning, property taxes are paid twice a year in March and in November. So every now and then there can be a shortage, especially if your property was assessed and increased to that $800,000 in, I don't know, let's say it happened in October. Well, you're going to have a shortage because that November payment pays July, August, September, October, November, and December. But it's being paid in November. So your property was reassessed in October, so it's slightly higher. The taxes went up for October, November, and December, 3 months. So In this scenario, your property taxes are going to eat up a little bit more money for those extra 3 months of higher property taxes than the mortgage servicer had planned for. There's generally a little bit of a cushion. You'll probably be fine. But this is where you will end up probably receiving a letter saying that your escrow account is now short. And they're going to do two things. They're going to change your mortgage payment to a little bit higher than this 57, 56 because they've got to move up to collect the current required amount, but they also need to recoup the extra money that they paid out for those 3 months that your property taxes went up, but they hadn't been able to collect yet. And then your mortgage payment will go down a little bit. Now, in this scenario, if you were short like that and you got that letter, most likely they give you an option of a one-time catch-up payment. You could write a check and have it put in escrow and bring it current, or you can pay the slightly larger amount each month with your mortgage payment. I always suggest making monthly payments if you are allowed, as long as you're not being billed for them, like you're paying interest or anything, which in this scenario you wouldn't be. All right, so now 2 years later, they reassessed your home value to be $850,000, which I'm reflecting here with a new property tax payment of $8,500, which is 1% of $850,000. But your home insurance also jumped up from $1,200 to $1,800. So your new mortgage payment is going to go up about $100 a month because of these two changes. Now, in this scenario, your escrow account is being taxed again at random times. We don't know when this happened, but they could have to pay your property insurance and one of your property tax bills at the same time or near each other, which could dramatically drain your escrow account that's been building up each month because of the changes to the two fees. What that's going to trigger is a letter coming out to you saying, hey, your escrow account is short again. And they're going to give you the amounts that you can, probably the one-time payment to catch up and get back on track, or they're going to show you that you can make this monthly payment to get back on track. And you can also see here on this chart that the principal payment and the interest payment has still been the same through all three of these changes. The principal and interest is the contract that you sign when you get your loan. And that will never change unless you refinance to a new loan, and all this would start again. Your mortgage company, your loan officer, your real estate agent have no control over what happens with the cost of property insurance or the value of your house going up. Ideally, you want your home value to go up, and none of us want to pay more taxes, but the two go hand in hand. If you're in California, and especially here in San Diego, when you're dealing with cities and counties and states that are having funding issues, one thing's for sure is they're going to send their property assessors out to evaluate homes. And they're going to do their best to recoup any monies they're potentially losing by having the current value of your house lower than it actually is. Because they're going to want that tax money. They're going to want it from you so they can use it for their state budgets. So let's recap here. What I've shown you is that a complete mortgage payment includes principal, interest, taxes, and insurance. Taxes and insurance go into the escrow account. Taxes and insurance also can go up randomly throughout the year, which could cause an escrow shortage because If one or both go up in the middle of the year and those bills need to be paid, the escrow account only has so much money because it's only collecting what is mathematically broken down to be collected. And if the two increase in cost, the escrow account will get drained and you will get a letter saying, hey, your escrow account is short. And you're also going to see that potentially if those two things, one or both, go up, you're also going to see a new mortgage payment amount. But I hope I've shown you in these scenarios that the principal and interest amounts will not change. Those are contracted for the term of the loan. When you purchase a home using a 30-year or 15-year fixed mortgage, the principal amount and the interest amount paid is not ever going to change. If you have more questions about mortgage payments, property taxes, interest, any of the stuff we've discussed, please reach out to me. I'd love to help. Make sure that you understand all the important information so when you are buying your next house, doing a refinance, that you can look at these documents and understand the math and how it works. Talk to you soon.